we're running out of extra dollars. And you can see that because the dollar supply is contracting, because the Fed counts it up to the dollar every month. And it's shrinking. So like, who's going to buy these auctions? I don't know. And what happens then?
Picture this: silver, long in the shadow of gold, is about to steal the spotlight in a way that's almost hard to believe. We're talking about a meteoric rise to $446 per ounce by January 2024. But this isn't just a wild speculation. It's a scenario unfolding right before our eyes, fueled by economic shifts and market dynamics. As we peel back the layers of this extraordinary prediction, you'll discover the forces propelling silver to new heights. It's a story of resilience, opportunity, and a future that's anything but ordinary. So stay tuned, hit subscribe for more thrilling insights, and let's explore how silver is setting the stage for a financial revolution. Let's dive into the heart of this astonishing narrative. The recent surge in silver prices to a 3-week high isn't just a fleeting moment in the markets, it's the prelude to something much bigger. This surge is intricately linked to the Federal Reserve's anticipated rate cut, a move that could rewrite the rules of the financial game. But why is this so significant for silver? The answer lies in the delicate dance between monetary policy and precious metal markets. When the Fed hints at a rate cut, it's not just an economic signal. It's a catalyst that ignites interest in assets like silver. Why? Because lower interest rates make non-yielding assets like silver more attractive to investors. They start looking for safe havens, places where their money can not just stay secure, but also potentially grow. But that's not all. The current state of the dollar plays a crucial role. A softer dollar means silver becomes more appealing globally. It's simple economics. When the dollar weakens, silver prices often rise as it becomes cheaper for buyers holding other currencies. This international demand can drive prices up significantly. And then there's the matter of treasury yields. Falling yields are another piece of this complex puzzle. As yields drop, the opportunity cost of holding non-yielding assets like silver diminishes. This makes silver an even more attractive option for investors looking to diversify their portfolios. Let's not forget, the technical indicators are strongly in silver's favor. The asset is trading above both its 200-day and 50-day moving averages, a clear signal of a bullish trend. This isn't just a blip on the radar, it's a sustained upward movement indicating strong investor confidence. The market sentiment is clear, silver is on the rise. But wait, there's more to this story. The upcoming Core Personal Consumption Expenditure (PCE) Index report is a key event to watch. It will offer critical insights into U.S. interest rate trends and, by extension, the direction of silver prices. This report could be the tipping point, further fueling silver's ascent. Now, I have a question for you. What's your take on silver's current market position? Do you see it as a temporary spike or the start of a long-term trend? Share your thoughts in the comments below. Engaging with your perspectives not only enriches our discussion, but also helps us all gain a deeper understanding of these market dynamics. As we delve further into the silver saga, it's essential to understand the broader economic context influencing its price. Global economic trends and the Federal Reserve's monetary policy are pivotal in this story. The recent dip in the dollar against major currencies has bolstered silver's appeal, making it a more attractive investment globally. But it's not just about the dollar's fluctuation. It's about the anticipation of what the Fed will do next. The Fed's monetary policy, especially the speculation around rate cuts, directly impacts investor sentiment towards precious metals like silver. A potential rate cut signals a shift towards a more dovish monetary policy, which typically boosts the appeal of non-yielding assets like silver. However, there's a twist. Despite the market's initial reaction to a potential dovish stance by the Fed, recent statements suggest a more conservative approach to rate cuts. This balancing act between the Fed's cautious tone and market predictions creates a dynamic and somewhat unpredictable environment for silver prices. Now let's talk technical analysis. Silver's momentum may currently show signs of slowing, but this doesn't necessarily spell doom. It's a complex dance of market forces where each step can lead to a new direction. The silver market is delicately positioned at a point where it could either take a short-term dip or continue its upward trajectory. It's a scenario that demands close monitoring of market trends and technical indicators. But there's a critical factor at play here: the upcoming Core Personal Consumption Expenditure (PCE) Index report. This report is crucial in shaping market expectations and understanding the Fed's future actions. It's not just a report, it's a roadmap that could guide silver's journey in the months ahead. The Core PCE Price Index will clarify U.S. interest rate trends, which are vital in influencing silver's pricing direction. A lower than expected PCE reading could reinforce expectations of a rate cut, potentially giving silver an additional boost. As we explore these intricate market dynamics, it's important to keep in mind that while we're discussing potential scenarios for silver's rise, this is not financial or investment advice. We're here to provide insights and analysis, helping you stay informed about the fascinating world of precious metals. And as always, if you're finding this exploration intriguing, don't forget to subscribe for more in-depth analysis and updates on silver's journey. Stay with us, as in our next segment, we'll delve into future projections and analysis, piecing together the puzzle of how silver could potentially reach that staggering $446 mark. Turning our focus to the future, let's dissect the factors that could catapult silver to an eye-watering $446 per ounce. It's not just about current market trends, it's about understanding the long-term potential and the variables that could lead to this seismic shift in silver prices. First and foremost, let's consider the green industrial demand. The Silver Institute, in its latest publication, revised industrial demand for silver significantly upwards. This revision isn't just a minor adjustment, it's a testament to silver's growing importance in various industries, especially those focused on green technologies. As we move towards a more eco-conscious world, silver's role in solar panels, electronics, and other green technologies becomes increasingly vital. This burgeoning industrial demand could be a major driver in silver's price escalation. But there's more. The silver market is expected to remain in deficit for the foreseeable future. This deficit, where demand outstrips supply, creates a perfect storm for price increases. As Metals Focus notes, the ongoing market deficit underlines the robust demand for silver, despite the challenges posed by higher interest rates and economic concerns. Speaking of economic concerns, let's not overlook the role of investment demand. The recent past has seen considerable ETF outflows and a general wariness in the investment community. However, as adverse economic factors become less significant, we might witness a reversal in this trend. Investment demand could pick up, further fueling the upward trajectory of silver prices. And let's not forget the relationship between silver and gold. Often seen as the more volatile sibling, silver has the potential to make up ground against gold. The gold/silver ratio, a measure of how many ounces of silver it takes to buy 1 ounce of gold, is forecasted to decrease. This suggests a strengthening of silver relative to gold, an indicator of silver's potential to outperform. Now, what does all this mean for silver's price? Commerzbank forecasts a rise to $30 by the end of 2024. But what if we push the envelope further? Considering the factors we discussed, the green industrial demand, the ongoing market deficit, a potential increase in investment demand, and the changing dynamics with gold, it's not unrealistic to envision a scenario where silver breaks past traditional forecasts, reaching heights previously thought unattainable. In our next segment, we will connect all these dots, drawing a clear, logical path to how silver could reach $446 in January 2024. We're building towards the apex of our journey, where we'll lay out the conclusive evidence and rationale behind this bold prediction. Stay tuned as we prepare to unveil the climax of this silver saga. And now we arrive at the apex of our journey, the moment where we piece together the intricate mosaic of economic indicators, market dynamics, and future projections to arrive at a compelling conclusion. How silver could potentially hit an extraordinary $446 per ounce by January 2024. To understand this, we need to synthesize the information we discussed so far. The forecasted rate cuts by the Federal Reserve play a foundational role. Such cuts would decrease the yield on fixed income investments, making non-yielding assets like silver more attractive. As investors seek alternatives to bonds and traditional securities, silver becomes a shining beacon in the investment landscape. Next, the green industrial demand for silver, which is on an unprecedented rise. As the world pivots towards sustainable energy and technologies, silver's essential role in these industries becomes a significant demand driver. This increased industrial usage, coupled with the ongoing market deficit where demand outstrips supply, sets the stage for a dramatic escalation in silver prices. Furthermore, the changing investment landscape cannot be ignored. As economic concerns that previously dampened silver investment start to wane, we anticipate a resurgence in investment demand, especially from ETFs and individual investors. This renewed interest in silver as a safe haven and hedge against inflation will add fuel to the price surge fire. And then there's the evolving relationship between silver and gold. As the gold/silver ratio narrows, indicating a relative strengthening of silver against gold, we're likely to see increased investor interest in silver. This shift could lead to a significant revaluation of silver's worth in the precious metals market. So when we combine these factors, the potential for reduced interest rates, the booming green demand, the market deficit, revived investment interest, and the changing dynamics with gold, we create a scenario where silver's value could skyrocket. Reaching $446 might seem like a stretch today, but in the context of these converging factors, it becomes a plausible peak for January 2024. As we conclude this incredible story of silver's potential ascent, remember that while we have based our discussion on thorough analysis and current market trends, This is not financial or investment advice. It's an exploration of possibilities, a journey through the complex and fascinating world of precious metals. And with that, we wrap up our exploration. If you found this journey as enlightening as I have, don't forget to subscribe for more insights into the dynamic world of finance and investments. Thank you for joining me on this extraordinary exploration into the potential future of silver.